So for more on the markets, let's bring in Eva Agi, investment advisor over at Gerber Kawasaki. Eva, good to have you here. Good morning. So let's talk about potentially this correction. Do you think the markets are due for one this month?
Well, first of all, thank you for having me. It's such a pleasure to be here this morning. As far as the markets go, it's really important to understand that stocks are not immune from a pullback here. Typically speaking, we want to see a 5% correction at least generally 3 times a year. We haven't seen one in 10 months. And as you said before, September is one of the worst months in the market. So I wouldn't be surprised to see one, but we're still bullish on the future where we see it.
All right, so let's talk about this month in particular. If September is traditionally one of the worst trading months, could this one be different? We have seen the last few months a lot of really good positive signs of the economy really turning a really good corner. Could this September potentially be different?
It could be. I think a lot of it is contingent on, as usual, COVID, the Delta variant. If we see that cases are ameliorating, booster shots are being passed out, that could have a positive impact on the markets.
All right, let's talk about the tapering situation, because that also is front and center of a lot of people's minds right now. Do you think the Fed is planning on tapering at all? And what's your take on the proposed idea here?
I think that tapering is something that needs to happen. It's going to happen. They've been preparing us for months here. So I don't think that we're going to see the kind of taper tantrum that we saw in 2013. However, it is coming and markets need to be prepared for that. The question is when. So it's all going to be contingent on the jobs report. $750,000 jobs is going to be that magic number. So if we see positive job numbers ahead of that, then tapering might come sooner. If we see it lower than we expect, it'll come later. It's all a function of the Fed's job mandate.
Okay, so let's talk about those job numbers. Again, we're expecting the ADP numbers, 8:15 this morning. Again, maybe about 600,000 private payroll numbers added there. But if we get the good job number on Friday, over 750,000, again, we've had 2 solid months of about 900,000 jobs added in June and July. What does that sort of tell you about the labor market if we have the 3rd straight month of really solid job gains here?
It's super positive. I think that as back to school happens, more parents are going to be returning to the workforce. What's been holding parents back is school going to be open, and can I return, or do I have to keep my child at home? So that's going to be really critical here. The jobs number is everything moving forward.
Okay, so Google announced yesterday, Eva, that they're going to reopen their offices back potentially in January, excuse me. And again, we've even heard Dr. Fauci say the new normal potentially would be spring. If offices don't reopen and have more employees come back this fall, and all expectations would be that the world turns a corner and we're basically back to normal in January, what does that look like for the rest of the year then? Is that going to basically mean that the rest of this year is going to be a wash then?
What I see is not a return to complete back to the office, but more of a hybrid play. And I think that that's super bullish. When people are out, they're also spending money, and these companies that we invest in tend to do better long term. So as Google returns to the office, more companies will do so as well, and spending increases.
All right, what about consumer confidence? We saw the data with consumer confidence numbers tumbling to a 6-month low. You know, we had the retail numbers that also fell about a percentage point, also from the last month as well. What does that tell you about the consumer confidence market here? And do you envision that basically because of the supply chain issues that we're seeing really basically hitting so many different industries and sectors right now?
It's so interesting with COVID how we see such disruptions in specific industries, particularly tech. And I think that as we get more news about COVID, that's really going to dictate where this all goes. Consumer confidence, it's understandable that it's lower or has been lower given the fact that there have been shutdowns in the semiconductor industry and tech production as well. But again, positive or negative cases, herd immunity in the future, that's going to be really positive and really critical here in seeing what's going to happen in terms of consumer confidence long term.
So, Eva, what do you think is the outlook then for this supply chain issue? Because I've seen some bullish people that think maybe this will be solved in the next 6 months. I've seen some bearish people say this could take years to really get resolved. And a lot of it, as you mentioned, is because of the chip shortage that we're happening right now. How do you see this playing out?
My opinion is that just like inflation, this is transitory. We're seeing the after effects of an economy that was shut down due to COVID. Again, as reopening happens, I do believe that this will pass and be beyond us. The issue here is simply manufacturing needing to take its toll and resume to normal. When you're shut down for such a long period of time, that can take time to start up again. But when it does, it'll, I think, be smooth sailing.
All right, Eva Agi is an investment advisor over at Gerber Kawasaki. Eva, thank you so much for joining us this early morning.